Welcome, everyone. Thank you for joining us today. I'm August Biniaz. I'm joined by 𝗖𝗍𝗶 Benesocky. Welcome, Ava.
Thank you, August. Hello, everybody. Thank you so much for joining us today. We are joined by our favorite person in the world, Alan Wunsch.
Oh, yeah, go ahead.
Thank you. Great to see you.
Yes. Jonah, please mute yourself.
Sorry
All right.
about that, everybody.
Great to see you, Alan. Great. So
welcome, Alan. So we're going to jump right into things. Alan, can you please tell our viewers a bit about yourself, your background, and your interest and involvement in tech, finance, and blockchain, all mixed up?
Okay, you want the short story. I am the CEO of Tokenfunder and a related company called TokenGX. So how about I just start from the very beginning? No, I have had a long career in finance and technology, specifically working with large-scale systems and a lot of startup technologies as well. I've implemented banking grade technologies, which is really where I got my interest in blockchain at the end of the day, working with a bank as my most recent corporate job before jumping into all things blockchain. I was a vice president at Scotiabank in global risk management. And I had a responsibility of having quality data coming in throughout the world into a data warehouse that was relied upon by the executives of the bank. And it was interesting in many ways, having come in from a fintech background to take on some large challenges and realize that systems are extremely complicated, and especially when you have to move information and move data around. My interest in blockchain is what brings us all here today. And that interest in blockchain started when Ethereum in Toronto came onto the scene in 2015. So 2015, Ethereum, which was this new way of really having digital ownership expressed in a global financial technology. It was launched essentially out of Toronto, and it was a Toronto, then Switzerland story. But I got the pleasure and the honor to be around those that were actually building it in the early days, and I got introduced to Ethereum as the next generation blockchain technology. And as soon as I saw this new programmable form of money or programmable form of ownership, I was completely hooked. So now you've got a global of what we can consider to be a financial internet that we can now use to create digital ownership and being able to create that ownership and then be able to transact it and transfer it. So most of you and likely most people by now have heard about Bitcoin and have heard about many other cryptocurrencies and Ether, even possibly on the Ethereum public blockchain. So Ethereum came after Bitcoin. Ether is a digital currency, but we do something different at Tokenfunder. And what's really exciting in terms of where we leverage the Ethereum blockchain is to establish digital ownership of real world assets onto this global layer called the Ethereum public blockchain and the financial internet. So I started off as a fintech person. I had a lot of interest in technology pretty much all my life, and have been really blessed with working on really groundbreaking technological projects and working with CFOs around the world. I think a lot of CFOs are going to be really impressed with what's happening in the Ethereum world these days, as more and more companies are becoming aware. Let's stop there. I mean, that's there's a lot more to unpack, and I'm sure you have questions.
We have questions, definitely.
Thank you for that, Alan. My next question for you is, could you please explain what Tokenfunder is? what services it provides, and if you could link that to real estate investing, that would be great.
Sure thing. Okay, so I talked about being able to establish digital ownership in this new global, basically a global layer of, and we use the Ethereum public blockchain. So what Tokenfunder does is it combines the traditional manner of investing through an online portal, and now combines it with the blockchain piece. So Tokenfunder started working, and I've got the little graphic beside me on the screen. Tokenfunder started working with the regulators to allow for a new form of digital securities to be registered on blockchain. And we pioneered this format in Canada, and we pioneered it in a way that everyday investors can come onto the Tokenfunder platform now and become investors in the issuing companies that have been approved and that have come onto the Tokenfunder platform. Now, as you know, and we're doing this because CPI Capital is becoming an issuer, and you have a very interesting preview offering there, and I'm sure we'll talk about it some more. But you can go to tokenfunder.com/CPI to learn about it. When shares in this offering become digitized, and what we mean by that is when somebody takes and decides to invest in this particular offering, the platform will ensure that it's a suitable investment for the investor, number one, and then we'll process the investment, make sure that the company such as yourself, CPI Capital, will receive the funds, and then we'll issue through the platform these digital share representations. Okay, so that's in a nutshell what we do today, and there's some more kind of technical aspects, but in a nutshell, it's onboarding of new issuers. So it's a platform which has both issuers and investors, onboarding new issuers, then onboarding investors and allowing investors to invest in these issuers that are on the platform. And then, of course, creating the digital securities to provide investors their ownership representation through the public blockchain. Now, I will add, and you'll notice that we're revealing what has been revealed already as FreedomX. That's a trading platform. Once now you have this digital ownership in the format that we created, you'll be able to buy and sell these ownership rights, just as you might transfer Bitcoin or sell Bitcoin or some other cryptocurrencies. But of course, we're not a cryptocurrency. We create a digital security that can act in kind of very similar ways. Okay, so we have the issuance, and then we have the secondary trading. So this is extremely efficient now, and we didn't have to build an entire global trading engine. We're leveraging and we're making use of one of the most secure blockchains out there, and that's the Ethereum public blockchain.
Incredible.
Okay, so
Alan's a genius. I love listening to him talk, but there's a few key terms that you continue to use and get repeated a lot in this space. So if we could take just a few minutes to go over a couple of the terms.
Sure.
If you could briefly go over what is a security?
So what is a security? A security is a financial instrument. So a security in the real world is something that is described and traditionally has been described in some sort of documented manner and agreed upon as your rights in a particular business or venture. So we typically call the documents either offering memorandums or the like. They describe the kind of rights you have as a shareholder of that security. So you take these terms together, and an offering memorandum describes the securities that are being sold. And in the Canadian terms, an exempt market dealer or a broker dealer, in broader terms, is the registered entity, and the registered entity that is allowed to interact on behalf of the issuing company to basically sell those securities to the investor.
Right, great. And just to quickly connect that with CPI and our group, so we create a limited partnership to purchase the assets that we acquired, assets that we purchased. Now, the limited partnership is comprised of limited partners, which are our investors, and general partner, which is our company. And within that partnership, we provide our investors with limited partnership shares. So those limited partnership shares are essentially the securities that we are providing to the investor. Those securities then, which currently are in the form of a piece of paper, become digitized on the Tokenfronter platform, if I'm correct on that, Alan.
Yeah, that's right. That's right. So, you still have to, you begin with the real world description of what a person is, what an individual is investing in. And so that's extremely important. And that doesn't go away in this case. But of course, will always be available as to describe those, the rights that investor has. So those offering documents are extremely important, and they describe what that security is. So it could be a Class A share, it could be a Class B share, it could be limited partnership units. Different kinds of securities are out there. Bonds, common shares. They're all different forms of securities, and it depends on the company and the issuer.
All right.
Great. So let's, I guess, go ahead.
Yeah,
this is a fundamental question. But we'll have it on because this is going to be on YouTube, so it's important to.
Of course. Could you please explain what is blockchain?
I can. In a nutshell, a blockchain is a digital ledger that captures transactions. So there are different forms of blockchain, and I will explain it as simply as this. So a transaction is a record of some data or some ownership unit likely moving from one person or one address on the blockchain to another. And the blockchain is a global digital ledger that records these transactions. Now, if you want to say, what are the different features of blockchains? I can expand on this a little for you.
Sure, if you like briefly.
Yeah, absolutely.
Okay. So, and I know you've got a group of questions there. So now, what's interesting about this is that we began, and everyone should really understand and read the original Bitcoin blockchain white paper. So find it, read it, it's very important. It was described as programmable money. Programmable money and peer-to-peer cash transfer mechanism. So the Bitcoin blockchain was the very first blockchain, and it does something extremely well, that it basically tracks and records transactions of the movement of Bitcoin units. That's it. I mean, there are now more kind of advanced things, but that was the genesis of it. Where Ethereum took it to the next level, another form of blockchain, is that it now allowed a developer, it allowed someone to put in software code into the blockchain that now you can represent a company, a bank, and other elements. And we call these things smart contracts. So a smart contract is code that we insert into a programmable blockchain such as Ethereum. And the Ethereum blockchain understands this code, says, oh, you want me to send something of value to this wallet, or take it from this wallet to another wallet. You want me to approve? There are now programmable things that you can do. So now we think of these securities that we're bringing onto the Ethereum blockchain as programmable securities. So instead of it being just, let's say, a cryptocurrency, yes, you can move a cryptocurrency around. A blockchain that's programmable allows us to have a smart contract that you can interact with. And that smart contract can, for example, decide that because it happens to be, the real world might happen to have a high level of, it may be extremely hot, and an insurance company has agreed in this smart contract that they were going to make a payout if the weather temperature went up a certain level, right? And then that smart contract would autonomously run and make the payments out through the blockchain. So now this is an advanced topic, but it's about programming the blockchain to do what we'd like it to do, and we program it to create tokens, or digital securities, which the most generic word for those are tokens.
That's the next question.
And well, they are software code.
Okay.
They are software code that the blockchain understands.
Okay. Maybe you can jump into tokenization and explain what a token is.
Sure.
That would be.
Well, a token. So this is the next level discussion, or the next level of a blockchain. So as I said, blockchain has transactions. Now, when we want to create a digital security, we step number one is to develop the code and put it into the blockchain. And initially, we could say we're going to create 100 units of a particular digital security. So we started off as 100, and that's all it knows. Then the next step we can take, and the blockchain is keeping track of all the transactions. We send a transaction to the smart contract, and we say, we would like to add Ava's wallet address into this smart contract, and we want to assign her 10 units of this token. And we send the transaction in, and that's called a transfer or even minting of tokens, and it creates the digital token in the blockchain. So as developers of these digital securities, we understand how to program it, and we understand how to talk to the smart contract, which is the token, after the fact. And then if Ava, guess what? We gave you those 10 units. Now you're registered as a token holder in that token's code, and really in the token's data, because the token itself is a combination of code and data in the blockchain. The data we changed, that the code itself is non-changeable. So we're not going to be able to change the code there, but we changed the data. Now, all of a sudden, if August, you come to the picture and you say, well, I'd like some of these units of this particular security as well. We send another transaction into the blockchain and say, okay, well, August, you get another 5. So we'll add your address or your account number, essentially, and the number 5, and we'll add you to another slot of data that's combined with the smart contract. Okay, so the code and the data together are what we call the digital security, or the token. And then in the future, we allow you to take some of your units, Ava, and transfer them to August. And it's transferable because we built that functionality into the token at the very beginning. Super. So it's very interesting. And we do some things that are regulatory compliant within our processes. And I'll describe it to you this way, because it's a bit of a more advanced topic. But in addition to the actual smart contract that is the code for the token. We have another smart contract that sits over here to the side that is referenced by the token that, let's say we call them the CPI token, okay? We have another one over here. That's called our whitelist smart contract. Now, in order for anyone to be accepted as an owner of this token, the CPI token, what we do is within our platform, we whitelist your address and your wallet address over here in this smart contract first. And then this one over here automatically references it so that we can naturally, as you can imagine, adhere to regulatory requirements and manage the transferability of these tokens. So advanced topic, but what it is your shares or your units are available in a governed manner, right? So does that make sense to you guys?
It does. No, that's perfect. I really appreciate that.
You're very.
Let's get it to the next question.
Let's talk about Ethereum.
Let's talk about Ethereum.
Let's talk about Ethereum. Ethereum happens to be a digital currency. It actually works much better than Bitcoin when it comes to the amount of time it takes for it to transfer between accounts and the cost of the transfer. So Alan, if you can please explain what it means that the Tokenfunder platform uses Ethereum blockchain to conduct its services. And of course, forgive me if I didn't use the correct technical terms in there.
You realize I was already I must have looked ahead to your questions because I've already introduced the Ethereum blockchain in a way. So for those that are new to Ethereum, Ethereum is the name of the blockchain. Ether is the digital currency that works in the Ethereum blockchain. So if you're it was a little confusing in the early days because Bitcoin blockchain and Bitcoin, they're sort of this synonymous, right? But Ethereum is the name of the blockchain, and Ether is the native digital currency. The native digital currency of Ether is something we use to pay the transaction fees. As I talked about the transaction fees, when we create a smart contract and we put it into the Ethereum public blockchain, into and make a digital token or a digital security, we pay some Ether to the blockchain, which is managed by hundreds of thousands of individual kind of computers or even mining pools and such. There's a network of these computers that are running the Ethereum blockchain, and that's a separate blockchain than the Bitcoin blockchain. But this is the programmable one. We're using the Ethereum programmable one, and we use some Ether today to create the token, to conduct transfers, to essentially have our transactions accepted by the blockchain. Okay, so it costs a little bit of Ether, and there's a lot of discussion in today's in 2021. There's a lot of discussion around the next level of development of Ethereum, and that's now described as a layer 1 blockchain because it's the original blockchain. We would think of it as layer 1, but there are now new layers or layer 2 solutions coming on board to reduce the costs of interacting with the blockchain, which are really interesting and will allow for a blockchain such as Ethereum. And there are others as well, but stay focused on Ethereum. They'll allow for this kind of blockchain to become scalable to, let's say, Visa-like volumes in the coming years. So this has really been a question of scalability as these blockchains have grown and whether they could scale to becoming a global financial internet. It's getting there. It's getting there. So Ethereum started in 2015. I've got a little timeline there at the very off my one shoulder. Yes. And it started in 2015. Look, we're in 2021 already, and it has taken this far and this long to become really a highly secure and respected public blockchain, we're going to see over the next couple of years leaps and bounds of scalability and improvements in user experience. So it's still early days. So good questions.
For sure.
We are so excited to be partnered up with 𝗖𝗽 because we want to discuss how we're democratizing real estate investing, which is something that we love to talk about, and just kind of discuss the partnership between CPI Capital and Tokenfunder, and how this partnership will allow retail investors to have access to incredible investment opportunities. So maybe you can kind of walk us through the process on that.
Yeah, and let's quickly see here. So CPI is a real estate investment company that buys institutional assets, the 100+ unit apartment communities. If someone wants to become an investor, what is the process they need to go through to invest in one of these offerings? So if we can just kind of on a practical term, walk through the process that it takes. Obviously, there are compliance for us. Our offering to even be available on your platform, there needs to be certain qualification for us to be on that platform. But after we are now have met those qualifications, we're on your platform. What is the process that an investor goes through to see the offering? What do they receive, and what are the benefits of such platform for a retail real estate investor?
Okay, sounds great. Right. So tokenfronter.com, and you'll see the little URL there, tokenfronter.com/CPI is the landing page for your upcoming offering. And somebody were to go there and basically sign up today and be interested in the offering. There's something called KYC. So let's just talk about this. So know your client is a regulatory requirement before anyone can invest. Now, you've just said that you will have an offering, and for an issuer such as yourself, you have an offering document. So we need to make sure that anyone that's investing understands what they're buying, and that's described in the offering document. And that offering document is made available on the platform. So somebody that reads it, likes the investment, is interested in investing, knows what they're buying, they come through the platform and they say, okay, I'm interested in CPI Capital's offering, and they basically confirm their what's called suitability, and you create an account that looks like a typical investing account with some questions that ask you about your risk tolerance and your timeline, your horizon, that sort of thing. So there's some key questions there. And once you're ready to invest, as the exempt market dealer, we basically approve the investment as suitable for you, the investor, and then allow for the funds to flow, and they go into a trust account on behalf of the issuer, which when the offering is closed, the funds go to the issuer, and then we turn around and say, okay, so based on the rate, let's say it's $1 per unit, you get so many units created as digital securities on the platform, and you'll receive those units or shares, or I'm calling them different pieces or different terms, but they're all very synonymous. We also then put those units into your digital wallet on the platform. So we create the digital security on behalf of the issuer. We also then make sure that the investor has it in their digital wallet. Now, there's also the platform also then has ongoing kind of document storage where the agreement, the purchase of the securities agreement is there, and other forms and other updates that the issuer has. So if there's monthly or quarterly updates on the project, they can be provided directly to the investors through the platform.
Great, great. So that's the two parts. So one is Tokenfunder provides a portal, an investor portal, where the investor can come in and see all the documentation, the offering memorandum, all the legal and so on and so forth. But also it takes their securities, in our case limited partnership shares, and it digitizes them and puts them onto a personalized wallet for each investor.
Yeah.
Great.
Yeah.
And so now that's on the front of it. Now let's talk about kind of what can on the I believe that TokenGX, I believe the platform. What can happen now with those digital share securities? And please talk about also the tradability and the secondary market and all the other great stuff.
Yeah, this is where it gets interesting. Really, very interesting, because once you've digitized something in the form that we do it, it is potentially tradable. Now, so let me take a step back here, because we became really the first digital securities platform that could be permitted to create a secondary market for these private market securities. So we're not talking about the public markets like a big board stock exchange. However, if an investor in the future wants to liquidate or find some more liquidity for their shares, sometimes in the past they would have to wait till the project was well along the way before they could sell their shares to somebody else, many years. In our case, we're making it possible such that, let's say, Ava, you were an investor, and August, you were an investor, and you were both on the platform. So Ava, you could sell your shares to August, and this is done through the magic of being able to transact and trade those shares through the platform. And that's what we call FreedomX. So from where we are today, there's going to be newfound freedom for anyone to be able to really sell their securities in a form that in a way that is very secure, and by the way, without our direct involvement. So again, we're deploying smart contracts to allow for this transaction to occur between individuals. So again, it's very very secure transaction and very secure transfer of ownership through the blockchain. And oh, by the way, the securities regulators have seen that we will provide a newfound auditability and transaction reporting that'd be difficult in the past. So this is going to allow for essentially real-time trading and then real-time auditability and such. And so for the issuer, let's say that someone's changed their holding, we then have the ability to create and offer a real-time investor list at all times, because we know the people, we know the investors on the platform, and then the transactions have happened. Sometimes they're called cap tables. They're called cap tables, like as in capital tables, but they're investor lists, and this is a kind of a wonderful result of being able to leverage this global blockchain for the purpose of being able to at all times know who the owners are and who the investors are.
Great. And I'll just quickly go over and compare what Tokenfunder and TokenGX is offering compared to the norm, or what is in place now. So as issuers of securities, we offer, our limited partners, our investors invest with us. They receive limited partnership shares, and they're invested in our project. Now, each project has a term. In our case, we try to exit our deals between 3 and 5 years. Other projects, depending on what kind of project they are, it could be longer, it could be shorter. But historically, the investor hasn't had the option to exit an investment as such. They could try to sell it back to the issuer, but that process is very cumbersome, and a lot of red flag, a lot of issues that have to hoops they have to jump through to be able to achieve that. But the tokenization of the securities allows for not only transfer to take place, but also a transfer of these securities to take place on a secondary market similar to a stock market, where you could go on and trade your Tesla shares. You could go and trade your CPI investment shares that you have, or you could even trade it to friends, family, business associates, and on the secondary market. So I just want to understand now, how is the price set? So obviously a price for most things are set by what is somebody willing to pay for it. But let's say somebody invested 100,000 with CPI, but their circumstances changed a couple of years into the project, and now they're saying, hey, I want to sell these shares, or the project ended up doing much better than we were forecasting it, and somebody wants to now maybe not having to wait till the project is completed by us. They want to exit it, but with a profit. How is that price set on this secondary market that exists?
Really good question. So we built it, we're building it in steps. And the first step is that there's what's called an order book. So an order book is a book or a list of buy and sell orders. So August, if you had bought $100,000 worth and you thought now your stake was worth $125,000 based on the information you have, you could put a sell order onto the platform and say, my stake and my shares are worth $125,000. That's my price. And that's essentially as simple as it starts. There will be, and then somebody else can come to the platform and Ava, you can say, I like that price, or I'm going to put in another buy order for a different price and see if someone accepts my buy order for a different price, or a lower price, for example. So there are limit orders, there are market orders there. So we don't set the price. The participants set the price. There are some more advanced features of a market that we're in the process of building, and so we begin with the order book, but there'll be some more advanced features. We want to start it off as being fairly easy to understand at first, so that's the reason for starting with an order book. But there's other options that are coming out that look like more automated markets, and they're more advanced topics. For today, the buyers and sellers are determining what they're comfortable with. So nobody's forcing you to sell for a particular price. In this format, nobody's forcing you to buy. You can choose based on what you see on what we describe as the order book.
Great.
Does that make sense?
No, definitely. It does make sense.
Yeah.
Now, go ahead, please.
I was good. There's one more feature here that when we discuss what the future holds, and now imagine this. The project, so the project run by CPI Capital, for which shares are issued, says we have a return, we have some dividends that we're going to distribute to our token holders, okay, to our shareholders, because we now have a digital token, and we've programmed it in a way to accept payment. So the smart contract is smart enough to accept, let's say we send in some US dollars or Canadian dollars in the form of a token. So there are USD stable coins. We have a conversion mechanism for USD to CAD that we're rolling out. So let's say let's just say somebody has so you have US dollars. You get the tokenized version of those US dollars. We can send it to the smart contract. Remember, the smart contract is programmed, and it can now take that digital currency or the USD, distribute it to all the token holders based on their proportionate share within the pool.
Wow.
And those funds can end up automatically in the token holders' digital wallets.
Got it. And are
okay.
like monthly distributions that we're sending?
They can be.
Can be.
It can
Okay.
be. Okay.
They can be. So we're getting into a next level topic, because once you digitize and you think of all this as kind of the pieces of Lego, or you've got the digital capability. Now, what would you like to do with it? Oh, you'd like to make it tradable. Well, how are we going to do that? We've got white lists of people that we know and can trade amongst each other. Then the next step is, oh, we'd like to easily, basically easily distribute or make distributions on a regular basis to these token holders. We program that in. We program that into the actual security itself, and then it's quite it's going to be quite efficient. This is the future of finance. This is the future of our capital markets, and we're leveraging what the groundbreaking work of a public blockchain that anyone can access. So really, anyone can create a wallet on the Ethereum public blockchain, where if you want to become an investor in one of the offerings that are on the platform, you get KYC'd and you get whitelisted. Then you can participate in the Tokenfunder platform of digital securities. Does that make sense, guys?
Incredible.
It does for sure. And now I want to, obviously, as soon as you talk about blockchain and tokenization, there is a link always made with Bitcoin. And we were, me and Alan were on a Clubhouse conversation not too long ago, and right away, even the conversation where people were trying to describe and ask questions that would call blockchain Bitcoin. So now on that topic, can someone who wants to invest in one of our offerings, can they use cryptocurrencies to be able to invest, or does it have to go through the same kind of process of them having to convert that into fiat currency and then investing with fiat?
Yeah, what we're announcing, what we'll be rolling out is partnerships with cryptocurrency exchanges. So if you have cryptocurrency and you want to invest, you'll do it through one of our cryptocurrency exchange partners. So this is again, this is an advanced topic. So today we accept the fiat, but yes, it is quite possible for someone with cryptocurrency to invest as well. Now, there's a conversion, and that how much is one Bitcoin worth, or how many shares is one Bitcoin equating to in your offering? We need to be clear with somebody. So if they take one Bitcoin, we know today that remember I just said, for the sake of argument, $1 was going to be worth one share. It could be some different. It could be $10 as one share. It could be $100 as one share, whatever the offering is. But then we'll convert that into crypto, the equivalent cryptocurrency.
That changes on every day, depending on when the investor is investing.
The value of cryptocurrencies is constantly changing, of course, but when somebody takes that cryptocurrency if somebody wants to invest, at that point of investment, it gets converted into essentially CAD or USD, but in our case, Canadian dollars, and then used as the investment vehicle.
Got it.
Okay.
We have some questions here from our Zoom attendees, and we'll get to Richard on Clubhouse as well. But Ali has a question, if you like.
So that's just like trading stocks.
So is that if you want to compare basically trading on the secondary market, is it similar to trading stocks?
So we definitely, we're reinventing private markets to make them feel more like public markets.
Great. Okay. Amazing.
Great.
And Riaz is asking,
so who are your competition, if any, and what is your competitive advantages.
And if I quickly may just jump on this one, we have had conversations with other groups which provide similar service, but one thing that they lack is on the compliance side, that they're not licensed to be able to offer these services. And Alan is a licensed exempt market dealer and also offers these services. Just had to say that, but please go ahead, Alan.
Yeah, that's really the answer. So we've really been the pioneer, and we're the first approved. We're the ones that really worked with the regulators in the Canadian space. There are others in other jurisdictions in the UK, in Europe, in the US with similar sort of models. In our case, we're the leading platform that has worked specifically with regulators to get this form approved for investors. So it's extremely important because a couple of years ago everyone was just creating tokens out of thin air, and frankly the regulators shut down some of those platforms, and for good reason. It takes a lot of effort. And it took a lot of effort, as you can tell, pretty much close to 4 years to get to a platform that would be compliant with securities regulations and that we could move forward with. So lots of exciting things on the horizon, but it's taken 4 years to get to the point of saying we can take real world shares. And by the way, it can be, we can, we're talking about real estate here. We're also talking about other, real world shares of tech companies, of other kind of projects that are going to get tokenized, and fractional ownership will be created. So yes, the difference here is that we've been the leading platform working with the regulators, and what that really means is that we had to demo everything we did. We had to create it in order for it to be essentially reviewed and commented on by the regulators. It's a long process, and we're very proud of what we've done with the support of the Ontario Securities Commission, the BC Securities Commission, Alberta Securities Commission, the Quebec AMF. Extremely proud of the fact that they really wanted to understand how we could innovate in the private markets, and we're doing it.
Great. And just a quick question before we get to the next question here. Does Tokenfronter have any plans of a leap to the US? Because it seems like a natural evolution.
Yeah. So there's I can't really speak to details around this, but our regulators have very good relationships with not only the US, but also the UK, Singapore, Hong Kong, other really well-regulated jurisdictions.
Okay. Great. So yeah. CPI Capital all over the world.
All over the world.
Well, that's exactly right. And so imagine somebody through the platform saying, I'm in Singapore, or I'm in the UK, and I'd like to be an owner through CPI Capital of these shares that are going to give me a return of X, right? Because you've got a target return, and they love your product, and they can be an investor from another jurisdiction using the offering memorandum process, and then we're off to the races.
Incredible.
Great.
Incredible.
We have another question here. I like Adrian's question, very direct, and we did talk about certain items that are plans we have in the future, just like, for example, being on a more international basis. But Adrian's question is, what is the specific user investor advantage as it is available right now, not in the future, for using such platform? And then also he asks, please provide example of Canadian real estate projects using tokenization to raise funds with secondary market trading.
Well, Adrian's got the right idea here. So a lot of details there. I've hinted at some. Look, again, this is fairly early days. CPI Capital is a sizable project that is on its way, and look at the size of this one. There there are others in the pipeline that I can't speak to. So Adrian, I'm really sorry, but I'm going to have to surprise you in the near future, because we've got some other exciting projects in other areas that are not, not competing with CPI Capital, but they're also real estate tokenization deals. So I know everyone wants to know the latest and greatest. You'll just have to hold on a little farther, because we've got we do have some exciting news on the way.
Sign up to Tokenfunder today, guys. You'll also receive updates and stuff as well if you sign up.
Certainly, and I should say, look, there's going to be rewards for early access and early sign-ups. So there's a lot of that tokenized rewards happening in the space, and again, coming soon. You should really, if you're interested in the space, sign up now. Get into the platform, because there's going to be process of cutting cutoffs at some point, and those that are in early are going to benefit.
For sure. And just to quickly talk about those incentives, discussion we were having yesterday is eventually our minimum investment is currently 10,000 USD, but we're looking to create different classes of shares for investors relative to their investment amount. So 10,000 and lower, anything between 1,500 and 10,000 will have a certain class of shares with certain returns. 10,000 to 50,000 will have certain returns, and 50,000 and above will have better preferential returns. So it's great to get in there today and sign up. So then you'll be there's no classes there. You'll be on the one class of shares. Next question here, Mike.
All right. How do we convert those distributions from the tokenized version to actual USD Canadian?
We'd be able to do that through the platform for you or one of our cryptocurrency partners.
Okay.
Great.
Yeah.
Now,
Riaz,
will your listed assets be marketed or cross-listed on competitor platforms?
Great question. Question.
Okay, so it's a great question. There are lots of securities regulations that we and everyone in other jurisdictions need to go through to be recognized, in the other countries and such. So, cross-listing on other platforms is certainly something that is something that we're looking at. So yes, and again, cross-listing is I think going to be one of those areas that yes, we're gonna get reach there, and we'll as well. We'll be announcing some of these cross-listing partnerships in the near future. Not in today's discussion though.
Yeah, and one thing that I personally thought about is that there are multiple operators and security issuers that are currently available on the Tokenfunder platform, but there could also be trades between those issuers as well. That's something cool that I see possibly happening right away, where someone who's investing in CPI could then invest in another platform and another offering. So let's go to the next question.
Okay, I just want to go down a little bit here.
Sorry.
Very interesting. Can you talk about how security of this digital wallet? How security of this digital wallet right here.
So how secure is a digital wallet?
How secure?
I think that's
that's the question.
Perfect.
Yes. Yeah. So I think I'm going to say it's secure. So this is a discussion of the Ethereum blockchain, as well as, let's say, the kind of wallet you might use. So we support we support all Ethereum digital wallets essentially. So we can and we do help investors by creating a digital wallet account or a digital asset account right on the platform. Many advanced investors will already have something, for example, a MetaMask wallet that is a is a wallet that a lot of people use, right? On the Ethereum public blockchain. There's others. There are other wallets that have been software wallets. There are hardware wallets. So we will be. So if somebody's interested in using any kind of wallet, they should talk to us, and we'll make sure that they're using a compatible wallet. I think that for the purposes of someone just onboarding, we can help with the creation of your first wallet right on the site. So no need to go out and essentially do something that is do something that is new to you. So we take the kind of the newness out of it, and we walk somebody through creating a digital wallet.
Great. And talking about creating wallets, it was 5 years ago when I got involved in Bitcoin and cryptocurrencies. And I remember 5 years ago that I was at my mom's house and her friends were there, and I got on their phone and I created a wallet in all their phones, and I sent them some Bitcoin. And it was funny, the conversation that we're having with each other. But Alan, we have Richard on Clubhouse. He's been patiently waiting. Richard, please go ahead. If you have any questions for Alan, unmute your mic and please ask away.
Okay, thank you. Actually, for a question. I think maybe in this time, can we go back to the beginning? Can you explain what kind of projects you're contemplating as tokenization? In particular, what I'm curious about is whether you contemplate a sort of individual project or a block pool of projects. And if you answer that, then I also ask questions.
And that is related as far as the projects that Tokenfunder is going to have, or one of his issuers, like for example, CPI Capital.
Well, let's say when a token. Well, let me emphasize the question. If I buy a token, is that token into a project?
You're cutting out there a bit, Richard.
I'm sorry. Is this better?
It's a lot better.
Okay, good. I'm sorry. A token holder will be holding an interest in an individual project or in a collective project as you contemplate it.
Yeah. Did you hear that, Alan?
Yeah, if I heard the question right, the question was whether the token holder would be holding rights in a particular project or a group of projects.
Exactly.
Each investment is an individual decision. So if somebody's interested in a mortgage investment product, that's different from the kind of more advanced product that you have. I'd say, and a different product profile that CPI Capital has, for example, in this development, right? So there's development projects. There are they're different. So you could have multiple digital securities or multiple tokens that represent the digital securities in your wallet, and they could be 10 different projects. They could be an infinite number of projects. Essentially, they would be individual. So the more advanced topic could be that CPI has multiple projects that somehow get basketed together under one token. That if that was the offering and people wanted to invest in it, that is always possible. But at this point, we're talking about individual investment decisions for individual projects. So at least it's something that someone understands very clearly, and not like a portfolio token that somehow represents many different investments.
Did that answer your question, Richard?
It did, and let me just sort of follow up. You mentioned the possibility once a series of tokens is out, that a developer or owner might change project, might swap project, might combine it with other projects. And I was just curious about how that would work from a point of view.
Did you hear that, Alan?
I didn't hear the question clearly. I heard something about the swapping of projects. I'm sorry, I didn't hear it very clearly through the Clubhouse.
You had mentioned the possibilities that a project developer might, in future years, swap projects with other developers. The project has been tokenized.
Oh, well, so there's not quite. I mean, we develop the tokens in a way that then can be transferred, and others might be creating tokens on other platforms, but they would ultimately we'd have to make sure that they were kind of compliant with our platform's requirements at this time. So it's an advanced topic. If you've got some specific questions around it, I could certainly talk to them and dive into the technicalities of it with you. But essentially, the programmability or the development of the token itself is something that we do based on the features and functionality that we expect that the platform to have. And things are always changing, and other developers might have some new ideas, but we do the development in-house. We don't kind of interact with other developers for our tokens, if that's also helpful for the answer.
Actually referring to the real estate developer, the developer.
The real estate developer. That's an August question.
Yes.
How much time I can use, but let me take you back to 1986, 85, 86 in the United States anyway. I was doing a lot of what were then referred to as blind pool partnership securitizations, where money would be invested into limited partnership interests, what the token sounds like, a lot like. And then a developer would go out and develop numerous projects, and you sort of relied on the developer. But the bottom line was, at the end, the investor had an undivided interest, and the question always was, what sort of interest was that? Was it a partnership? Was it a tenant incumbency? Whatever it was, in numerous projects. And then the crash happened in the real estate in the later 88, 87, 88, and that all came to a halt. And so what I was thinking was that this might be the opportunity for resurgence of these type of blind pools, as we called them, using the tokenization as the funding for the acquisition of equity interests in a basket of properties. And that's what I was asking. But before I answer that, the second question, and I know you're Canadian, but I wonder if you've heard whether people are thinking about, from the U.S. tax point of view, is this going to be treated as a partnership, or there can be K1s? Will it be a suitable investment for IRAs and retirement plans and so on? Have you heard any thinking about, just, especially in the case of a multi-class token system, what the tax consequences might be?
Alan and August, I'm happy to chime in on the second part of that. If you guys want to go ahead and answer the first part.
Sure, Mohsen. Alan, please go ahead.
I'm going to defer to your tax expert for the tax question. I'm going to need to do that. And I think from what I heard, it certainly sounds like it is possible to have these pools, and there are advanced kind of liquidity pools that we are that we're exploring. So it's not something that's available off the shelf, but we're certainly exploring those sort of solutions. And again, I think it's a question that I'm going to have to take offline and kind of dive into, because it's a little more specialized. But I'd certainly love to explore that with you with respect to the pools, the capital pools, or the blind pools.
Yeah, and Mohsen, if you'd like to touch on, Shane, please put your mute on if you don't mind. We're just going to have this question answered, Shane, and you can jump in after.
So I just wanted to ask if Mohsen, as he answers this question, because it's a great question. Mohsen, were you in the Matt Compost room the other day when they were talking about the tokenization? Because I just wanted to hear you kind of piggyback off of that, or add to it, or debate it.
I'm actually not sure. I've been talking about tokenization in a whole bunch of different rooms, Shane, so I'm not sure which room you're referring to. Richard, my name is Mohsen. I'm the founder of 𝗖𝗽, which is previously known as Tokenism. We're a platform that tokenizes real estate assets. We're up and running. We're live. We've got 2 deals that are active on the platform right now. We're based out of Cincinnati, Ohio. 100% compliant with SEC, FINRA, and CFTC, and these are registered securities that we're offering, moving and providing the secondary marketplace for trading those assets as well, just like Alan's platform is working on it. We have a slightly different approach where we put blockchain as the underlying tech, and the user experience doesn't have any interaction. The user doesn't have any real interaction with any blockchain wallets or anything on those lines. We use the non-custodial wallet, where setting up and signing up is as simple as signing up with your email address. In terms of the legal and tax structures that are concerned, we use a structure which is recent.
And this was a question. This was Richard's question that you're getting to currently, correct?
That's correct. So in terms of the tax structures, over the last 5 to 7 years, publicly traded LLCs have become more and more common, and that's the structure that we've chosen to go with, which means that you would be getting a K1 at the end of the year, and you would be taking benefits of pass-through taxations. Having said that, we can't provide you any legal or tax advice from your own perspective. I'm just telling you what we're doing from the tokenization perspective and the tokenomics perspective.
Great. And if you guys on Clubhouse could wait, we have a few questions here on our Zoom attendees. So please go ahead.
Okay, so is this a Canadian LP, or is a 1040 NR and ITIN number required for US income?
Alan?
Who's your tax expert with respect to the U.S. side? I think if you so maybe we can follow up with Clint or the right separately.
Okay, sounds good.
Here's a good one from Jonah.
And Jonah is on
Clubhouse.
Clubhouse.
As well.
So why don't Jonah? Why don't you take your mic off and just go ahead and ask the question, so we'll get some engagement with the Clubhouse.
That'd be great
if you can.
Hi everyone, this is Jonah here. Hi Alan, great webinar. Thank you so much. My question is, I'm wondering, is this a brokerage as far as your Tokenfunder as a company? And also, have you identified some risk that maybe an investor can be educated on? And also, is this something that you plan to white label, or is it a pass-through solely through your Tokenfunder entity?
Great.
Thanks, Jonah. First of all, so yes, Tokenfunder and the registered security dealer is TokenGX. So in Canada, it's described as TokenGX, which you'll see on the bottom of the tokenfunder.com website for full disclosure. So it is a dealer. There's a registered dealer. So we have a dealer representative. We have compliance, everything that a broker dealer would need in the private markets. So that's kind of step number one. Are there risks for an investor to use Tokenfunder? The real risks, so the answer is there are technological risks as you might expect in some of this technology. We take some of those risks away, so we mitigate those with other kind of processes to make sure that if for example, there was some concern with the blockchain at any point in time, we would be able to, or if you had a problem with your wallet or something, we'd be able to help. I mean, these are non-custodial wallets. We don't have your private keys, which is really important. But in the case of you're somehow losing your using your wallet, we can actually support the movement of shares as necessary. So then, of course, you need to understand the risks of the actual investment itself. So the investment itself is something that has the risks, as you well are aware, that has the risks that are listed in its offering documents. So there's that, but as with any platform, I mean, there are risks, but we don't, very importantly, we don't own your shares. We don't take somehow custody of your shares. This is non-custodial. In the world of blockchain, we call it non-custodial because you have custody of your private keys to your wallet. You have custody of your shares. So if for whatever reason the website were not to be functioning for some period of time, for some strange reason, that would have no impact on your ownership of these shares. And can Tokenfronter be a white label type product service? It can be. We've had a lot of these questions, and there are ways that we can make it possible for an issuer to kind of have a private cordoned off area if they so choose. That's a bit of an advanced topic, but at this point, what we're offering is the Tokenfunder service because a lot of our issuers still need the support.
Great, and thank you for that advanced question, Jonah, our good friend.
Yes.
For me to jump in here, and I don't want to create any kind of tension, but what is the difference? Mohsen is talked about. They have a platform in the US and that offers similar kind of concept of tokenization. But in our conversation, Mohsen they are currently not a licensed broker dealer. And what is the significance of the tokenization platform being licensed? And can a non-licensed tokenization platform still operate in featuring products and then allowing for those products to be traded and all the other good stuff? I want to have an understanding about the licensed and not licensed part.
Well, I mean, I can't really speak to other platforms, so I won't. But what is, for example, and you can look in each jurisdiction, and the U.S. is one that we know a little bit about. But in order to be able to sell securities on behalf of an issuer, you have to be a registered dealer. So it's kind of full stop. You can't be offering digital securities to the public and not be a registered licensed dealer. So that's an important kind of requirement that you can't get around. Now, where we're taking this and where we pioneered our platform is in the secondary trading side. So these are now a whole set of new marketplace regulations that a platform needs to abide by, and we received approvals to do this last year. So this is really groundbreaking Canadian securities approvals to build out a non-custodial private market digital securities trading engine. Really unheard of, and we had this from day one, but it took a couple of years to get to a point where we could take this into full kind of secondary trading. There's a lot of advanced requirements around price discovery and disclosures. One thing I didn't disclose, many with disclosure requirements. I don't know if I left you, but many years ago. So not only am I in fintech, but I understand the importance of disclosures, and that's something that the regulators are very keen about, just making sure that investors have the proper information, right? That they would need in order to make decisions on their trading. So our issuers have to provide periodic updates and financial updates and or other business updates on material matters before they can become issuers that have trading securities on our platform.
Great, and we have
all good fun.
Yeah, we have actually Mohsen on the Zoom. He joined on the Zoom as well, so we'll have better audio here. Mohsen, could you describe does your platform offer the secondary market where these securities can be traded, and also as far as being licensed as a licensed broker dealer, how are you able to get around that part, and does it create some hurdles for you currently not being licensed?
Yeah, so we're in the process of getting our license, and Alan is absolutely right. To get third-party issuers on your platform, you absolutely need to have a broker-dealer license. We expect to have our license in place by end of April, is what our expectation is. We spent 2.5 years with SEC, FINRA, and CFTC in setting the roadmap and these timelines in place for it. In terms of the secondary market, there's an initial hold period, and after that, the secondary market opens up. How we're going around it is we actually own the assets that we're listing on the platform at this point in time. So the entire premise behind doing Reg D 506C offerings, which are open to accredited investors only, and you're allowed general solicitation on them. That's how we're soliciting investment for these assets by tokenizing them on our public-facing platform. Yes, once we have our broker-dealer license, that's when we start providing the services to people like CPI, like Alan is providing to you right now in the US, and we can have third-party issuers on the platform issue securities. As far as disclosures are concerned, and public disclosure of information and constantly providing that information, that is very, very highly regulated and much needed. There's no two ways around it. You have to provide the appropriate disclosures when in the initial offerings, along with appropriate updates on each asset as well. That's some of the basic items needed by SEC, FINRA, and CFTC, and that's where some compliance costs come in as well.
Great.
Does that answer that?
No, for sure. And we have booked Alan for an hour, and we're just coming to a pretty end of our show here. But another quick question for you, Mohsen, and also Alan. We were discussing about how Tokenfunder is using the Ethereum blockchain to be able to create the tradability of his tokens, and also the digitization of the securities. What platform, what blockchain are you guys using in your company, Mohsen?
Right. So we originally started off on the Ethereum blockchain. In order for the entire exchange and the marketplace to work, and the initial offerings and the trading of these tokens, we have about 42 different smart contracts that come into play. And the reason why I mentioned that is because that means that there's going to be a lot of gas fees that come into play. And we waited for about 1.5 years before we decided to make the switch from Ethereum to Binance. And the reason is purely Ethereum is not going to be moving away from a proof of work to a proof of stake at least till the end of this year, if not early next year. And that timeline could always be pushed forward at any given point in time. Just as the operator of the platform, and as the exchange or the issue or someone who's facilitating the issuers, one of our key goals is to keep those fees really low for the issuers and the buyers and investors as well. So by using Ethereum, it was not the best use of those funds, and it was extremely high fees. Now we could have used a layer 2 solution on the Ethereum blockchain as well, but there is no real established layer 2 solution at this point, which could work out really well with security tokens as such. So we explored multiple different options. We use a 3-token. We currently use a 2-token architecture, and as we're moving on to Binance, we're moving to a 3-token architecture. So there's a lot of blockchain interaction. While we say blockchain is not on the forefront for our platform, and it's the underlying technology, but it's very heavily used in the entire process around each transaction and each login and the whole 9 yards. So the cost of running those transactions increases so much that democratization and smaller investment then kind of becomes moot of sorts, and that becomes unaffordable. So we want to ensure that all of that stays in play.
Okay, great. Thank you. So we're coming to the end of our show. If Alan, if you'd like to respond to that, we can do that. If not, we can continue this conversation on Clubhouse at another time. I'll be happy to invite Alan and our other guests. Our Clubhouse link has been posted, and I can send it to everyone who attended this webinar. And we really appreciate your time, Alan. We appreciate
really
everybody else that
you.
came on. Thank you for taking the time. And this is a constant learning. So if you learned a bit today and could take away some golden nuggets, please join us again. And we'll try to bring Alan back regularly because every time he comes on, I learn something new. And really appreciate that. Thank you so much, everyone. Thank you, Alan.
Thank you, Alan.
Thank you. Great to see you. You're very welcome.
Everybody have a wonderful day.
Bye-bye. Bye-bye.
Thanks, guys.
Bye for now.
Apologies for being super late. And always great learning from you, Alan.
Thanks.
Bye.
You too. Okay, cheers. Bye now.